In recent months, America's aggressive tariff policy has sent shockwaves through global markets, damaging decades-long economic alliances and pushing key trading partners into unprecedented collaborations. The decision to levy heavy tariffs against Mexico, Canada, and China, a policy hallmark of President Donald Trump's administration, has ignited a fiery backlash that risks isolating America on the world economic stage. America's bold but risky move. On March 3, 2025, the U.S. administration implemented significant tariffs, including a 25% tariff on goods imported from Canada and Mexico and doubling the tariffs on Chinese imports to 20%. Perhaps most controversially, America placed a 10% tariff on Canadian energy products, a sector traditionally viewed as a symbol of mutual economic benefit between the two neighboring nations. Initially promoted as a strategy to bolster American industries, protect local jobs, and balance trade deficits, this aggressive approach is rapidly proving counterproductive. Allies turn rivals. Within days, American allies responded decisively. Canada, historically one of America's closest allies and largest trading partners, swiftly retaliated by imposing equal and targeted tariffs on $20.6 billion worth of American steel and aluminum products. Canadian Finance Minister Marie Tremblay emphasized that these measures were necessary to defend national economic interests against what she described as unjustified and provocative tariffs. Similarly, Mexico's government responded with targeted tariffs on key American agricultural products, automobiles, and technology exports. Mexico's move aimed directly at regions within the United States whose economies heavily rely on exports southward, thus creating internal political pressure against America's current policy. Meanwhile, China's reaction was predictably robust, announcing reciprocal tariffs against major U.S. products, including soybeans, aircraft, and electronics. This escalation has only deepened tensions between the world's two largest economies, with ramifications reaching far beyond bilateral trade, shaking global markets and fueling uncertainty worldwide. A new economic alliance emerges. Perhaps the most unexpected development has been the rapid forging of new economic alliances among America's estranged trading partners. Realizing the economic threat posed by American tariffs, Canada, Mexico, and China have begun strengthening their economic ties. High-level diplomatic dialogues have intensified, with talks now increasingly focused on mutual economic support, shared technology, and collaborative infrastructure projects, bypassing traditional dependence on American markets. Moreover, major global economies previously neutral, such as the European Union, Japan, and South Korea, are closely monitoring developments and exploring strategic trade dialogues independent of American interests. These nations fear becoming future targets of unpredictable American economic policies and thus seek safer economic partnerships. In a symbolic yet powerful step, the European Union, Canada, and Mexico have accelerated negotiations on alternative trade agreements, enhancing mutual market access and lowering trade barriers significantly. This shift is fundamentally reshaping the global trade map and diminishing America's traditional role as the dominant trading hub. Economic and political fallout. Domestically, American businesses and consumers are bearing the brunt of these retaliatory measures. Prices for everyday goods, particularly consumer electronics, food products, and vehicles, are steadily increasing, squeezing household budgets and causing consumer confidence to waver. American industries heavily dependent on exporting goods, agriculture, automobile, technology, and energy sectors, are experiencing substantial losses, threatening millions of domestic jobs. On Wall Street, investors express anxiety as market volatility increases due to trade uncertainties, leading to sharp fluctuations and undermining confidence in American economic stability. Economists warn that prolonged isolation through tariff disputes will likely accelerate inflation, dampen economic growth, and reduce long-term competitiveness. Politically, the U.S. finds itself increasingly isolated. International bodies such as the World Trade Organization, WTO, have criticized America's unilateral approach, arguing it violates established global trade norms. Consequently, America's influence in shaping global economic policy is waning, giving way to rising powers willing to operate within cooperative international frameworks, a threat to the dollar's dominance. Beyond trade, another significant consequence of America's isolation is the increased scrutiny and questioning of the US dollar's role as the global reserve currency. China, Russia, and even European nations have recently ramped up discussions on reducing their reliance on the dollar in international transactions, a move which, if actualized, could drastically undermine America's economic influence globally. Experts warn that persistent American isolationism and aggressive economic policies could trigger a global shift away from the dollar, drastically reducing American leverage over global finance and leaving its economy exposed. Path forward or further isolation? America now faces a pivotal decision. Continuing down this path risks permanent isolation and economic harm, while reversing course could restore trust with global partners and stabilize international markets. Economic analysts broadly agree that collaboration, not confrontation, is the key to economic prosperity. Yet, as America's traditional allies continue to form alternative economic alliances and strengthen partnerships outside U.S. influence, the window for reconciliation narrows daily. America's future position in the global economic order hangs in the balance, and its next steps could very well define international trade for decades to come. In an increasingly interconnected world, isolationism is proving to be less a solution and more a self-inflicted wound, leaving America increasingly alone as its allies forge powerful new bonds, united against economic uncertainty brought about by America's tariff wars.